All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself. I'm Greta Wall. I'm your host. I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market-related discussions, here's a quick look at Derrick's current positions for disclosure purposes. As again, he is the head trader at T3 Trading Group. All right, the title of our stream today is Nvidia Earnings Week. Welcome to the big week of earnings season here right at the end. So on a Monday, on Nvidia Earnings Week, how is your day going so far, Derrick?
It's been a really, really slow day, which is kind of what we expected. The NASDAQ's been showing a little bit of relative strength. The IWM has been showing a little bit of relative weakness. That's after we obviously had some major fireworks, some real major fireworks on Friday, with Jerome Powell at Jackson Hole indicating that he's about to begin an interest rate cutting cycle again with most likely a 25 basis point cut in September. Helped a huge market rally. We had a lot of action that day. The IWM was very relatively strong. The NASDAQ was weaker, which makes sense because in a lower rate environment, it's a big boost to those small caps and mid caps. And, today was a question of, do we just kind of see continuation and digestion, or do we see a resumption of how the market was trading prior to Jackson Hole? Because the week or two prior to Friday, interestingly enough, even though the indexes weren't really pulling back very much, the biggest market leaders, Nvidia, who's going to be reporting on Wednesday, Palantir, AMD, had been trading much, much weaker. And it seemed like there are other stocks that were propping up the market, maybe some more value type names. And Friday, though, brought everything back screaming higher. And overall, the S&P is looking really bullish. But underneath the surface, we're seeing some of these names not trading as well as they had been previously.
I do want to discuss that dovish Powell speech we got on Friday. I spoke at the Jackson Hole Symposium Friday at 10 a.m. Eastern Time. Like you mentioned, the market reaction being the small caps, mid caps, definitely overperforming the big cap tech stocks when it came to the response to that turn. What was like your read on what the chairman had to say in particular, for forward-looking policy? I mean, he was like, we're going to adjust our policy, let inflation run hot. We have to care about the employment market. What does that mean to you as a trader and for this market moving forward?
Yeah, so he did strike upon the fact that cutting rates at the end of 2024 helped to bring the Fed rate that they're holding at like closer to a neutral rate, a little bit less restrictive. But that was a result of the fact that inflation had come down by so much they were able to do those cuts. These cuts this time are a little different. So the cuts at the end of 2024 are basically what was described as maintenance cuts, meaning inflation was as high as 9.1% in 2022. In 2024, it went down to 2.6, 2.7%, something like that. It was working its way to closer to the Fed mandate. So the cuts that they did at the end of 2024 were basically saying, like, when you think about the restrictiveness of a higher interest rate, it's like a spread, right? So if inflation is at 9.1%, then you need your interest rates to be even significantly higher in order to drive it back down. But when you get it down to, let's say, 3% compared to 9%, you can bring interest rates down to maintain the same amount of restrictiveness. And that's what the 2024 cuts were about. The 2025 cuts are more about the economy slowing down, about the employment situation, that non-farm payrolls number that we had, whenever that was, a couple weeks back now, that was so disastrous with those really bad revisions. So the fact of the matter is the economy is slowing. He also did recognize that inflation is reigniting because of tariffs. And again, this is what tariffs do. They're slow growth, high inflation policies. So it's a very difficult situation for the Fed to fight that. But they're seeing bigger problems on the employment side right now than I guess they are on the pricing side. So they're willing to at least do some cutting as a result of that to get a little bit closer to a neutral rate to try to boost that. So we'll see. A 25 basis point cut to me doesn't seem like a very big deal at all. The market obviously loved it on Friday. I don't think it changes the bigger picture narrative that the economy is beginning to slow down. Interestingly enough, the drop in the labor force is going like almost 1-to-1 with a reduction of jobs available. So we're seeing less jobs available, but we're also seeing a smaller working force at the same time. So that's helping to offset a little bit, but it's concerning enough to the Fed that they're willing to most likely give us a 25 basis point cut in September. But we will see what the August numbers look like in the beginning of September prior to us getting our September Fed meetings. That could still adjust things a little bit.
In the back, with that in the backdrop, we do get more inflation numbers this week. Friday is the PCE price index, which is the Fed's preferred measure of inflation. Now that the Fed chair has basically said inflation is going to do what it's going to do, and we don't really care. We care about the labor market. Does a number like the PCE mean less to the market on Friday?
No, I don't think so. And I think that the Fed does very much still care about both sides of the mandate, including the price increases. But an uptick to 2.7, 2.8% in inflation with unemployment being a much worse situation, then they're going to focus on that side.
Yeah.
But if we were to
see, it would have to be some like crazy number for the market to be like, whoa.
Right.
If we can't ignore this.
A really hot PCE, all of a sudden we could see the probability of that cut being reduced again.
All right. Let's talk about Nvidia. And like you mentioned, earnings are on Wednesday. This is the big number. It's like so frustrating that they're at the very end of the earnings season. Maybe they didn't used to matter, but now they are the market. So it's like we get this earnings report right at the end here. Maybe you want to pull up your charts and we can, take a look at what Nvidia has been doing heading into this report. Of course, we still have today and tomorrow and all day Wednesday because they report after the close. But as of Monday, we can look at what this stock has been doing before the earnings report and how you're feeling about it as a trader.
Sure, absolutely. So interestingly enough, like I was saying, prior to Powell on Friday, we had seen some weakness come into this Nvidia. Nvidia lost a majorly important support level around 179.50 to 180. It actually has recaptured it this morning. It's recaptured it this morning, and it's showing great relative strength. But it lost that really important level. AMD started trading a lot weaker. Palantir got absolutely obliterated back lower. We'll see if that weakness resumes or not. But now Nvidia is working its way higher. Nvidia was able to break lower despite getting price target increase after price target increase from the sell-side analysts recently. So on if I remember correctly, on the 20th, we saw two different analysts increase their price target for NVIDIA. Then on the 20th, we saw one. On the 21st, we saw two price target increases. On Friday, we saw one price target increase. And today we saw another price target increase. So that's what? 1, 2, 3, 4. That's 5 price target increases in 4 days coming from the analysts. So the real question when it comes to this NVIDIA report is how much is priced in? And I would note to you, by the way, I totally agree. It's such a pain that NVIDIA reports so late. It's like earnings season never ends anymore because earnings season is really over, but we still haven't gotten reports from NVIDIA and we haven't gotten a report from AVGO, and those are two of the most important companies that are out there. But up until now, unless I'm mistaken, every single semiconductor company that is reported that I follow has traded down on its earnings report over the course of this earnings season. Literally every single one. AMD had a great report back here. They gapped it down. They traded it down. Eventually it bounced back a little bit, and it's been sloppy ever since, but they traded it down. And that was probably like the best report out of all of them. I remember ARM traded down, ASML gapped down and traded down. Literally every single one has not been good, even if the report itself has been good. And it's the same thing, I think, coming into this report with NVIDIA. You can't count this company out, right? This is the #1 leading company in the entirety of the AI space. They are the railroad tracks. So you cannot count this company out by any means. I won't be surprised to see this thing trade at $200. I think we've been seeing a bunch of smart money, bullish option flow at the $200 strike coming in. That's always a little bit of a gamble, even for them. My partner, Pat, who's a big follower of option flow, will always be the first person to say it's not as important when it's happening right before an earnings report as it is when it happens otherwise. But you can't count the company out. They could easily be higher. However, they are going to have to beat by a lot. If you see an inline number in Nvidia like across the board, I can almost promise that they're going to destroy the stock on it. They're not going to be able to beat by a little bit. They're not going to be able to come in line and perform well. They're going to have to absolutely and utterly knock it out of the park. And guess what? They can. But it's been an interesting earnings season because there have been very few companies that actually have, the ones that we really follow closely. The biggest ones were Microsoft crushed it. And even with that, has not traded well. Meta crushed it, like absolutely and utterly crushed it, and is only trading okay. And then the other one that absolutely crushed expectations was Palantir, but Palantir's forward PE and multiples are just so insane that even though they ran it really hard for 4 days, they eventually rolled this thing down, fully filled its gap from its earnings report, and even went beneath it. So can Nvidia be the odd man out in not just semiconductors, but really big tech as a whole, where it absolutely demolishes earnings, gaps up to 200, and then trades to 225 over the course of the next couple of days? It can, but I think that the risk is to the downside. So bageled ahead, as my buddy Josh Leffler likes to say. I would guess down on this one, but we'll never know until it happens.
Yeah, and I mean, it's that, for quarter after quarter after quarter, they were beating and raising by such large margins, but then it's eventually you get to a point of like that growth they don't stop growing. They're just not growing at the rate that they were in 2023 and early 2024.
I also feel like, and I could be completely wrong on this, I think it's really, really difficult for them to have beats as big as they used to be because of now how closely followed the company is. Like everyone is following every possible move that Nvidia is doing. We've already seen the reports come out from all of their biggest customers, Microsoft and Meta, all the biggest customers. So we already know what they have forecasted. That should all be priced into Nvidia at this point as well. So we'll see.
Yeah. An interesting, storyline in the semiconductor space is the Trump administration's involvement with all of these companies, making deals with AMD and Nvidia to be able to sell chips in China, buying a 10% stake in Intel, as one of the only companies that still makes their chips in the US. What do you think about the Trump administration's dealings with these companies and how it can impact the stocks over time? What about the Intel deal? Can we talk?
Sure. I mean, look, to try to not get too deep into politics, but I'm a believer in not big government, and I'm a big believer in capitalism. I feel like you should be if you are a trader, and this is not competition. This is not capitalism. It's something very different when you're having the U.S. government come in and start taking ownership of private corporations in order for them to be able to do deals. I mean, it was just like a couple of weeks ago that Trump was railing against the Intel CEO, making it sound like he wanted to kick him out of the country. And then next thing you know, they're best friends and the U.S. government's taking 10% of the company. I just don't get it. And I don't even think that these export taxes that Nvidia and AMD are going to get charged, I don't even know if those are constitutional. But I'm not a constitutional lawyer, so I will leave that to the experts. I mean, I don't love it. I hate the whole concept of it. Like, are we not supposed to be providing these to China because they're our supposed enemy and we don't want to give them their technology? Or are we only going to be able to provide them that important technology if the government's getting a piece? I just really don't like the whole concept of it. But the big question is whether or not they do a dumbed down version of that. The name's escaping me. That smarter chip for Nvidia, and then allow like their whatever their best one is. There's chatter about a dumbed down version of it. Yeah, right? and then selling that out to China. If they do that, it would be extremely, extremely bullish for Nvidia. It opens up a whole nother business line for them. And in my opinion, I agree with Jensen Huang. You know, Jensen has said very, very specifically, like, either Nvidia and the U.S. companies can be the railway for the entire globe with our chips, or we can attempt to deny these technologies to these other countries, and then they're just going to figure it out themselves over time. And I'm in the camp of always free trade, no tariffs, things like that are going to be the best thing for the United States economy. And I would let Nvidia sell whatever they want, honestly. But again, I'm not a national security expert. So if you're making the case to me that it's a national security concern that we're providing these AI chips to China, fine. But then don't make it that we'll provide them at a fee, an extra fee to the government. Either it's a national security concern, or the United States of America is founded on capitalism, and let's do that. So that's my opinion on it. But outside of that, I mean, it's very difficult. It seemed like the Intel stake was a negative for AMD and helped some of that AMD weakness. But beyond that, I really don't know. I don't have an opinion. I haven't been trading Intel. I like Intel as a long. I basically just don't even want to be involved in this, though, with this whole U.S. government stake. But I liked it as a long, as like a play almost similar to General Electric like 6 years ago, where you know, Intel's clearly the loser here, but they have got, the stock has been just destroyed for so long that they do have enough intellectual property and enough going on that there is value there. So it's almost like the value play of these chips. And if they could ever actually turn things around, you could get a lot of upside. Otherwise, it's probably going to be primarily going sideways or grinding higher, and you can make a little bit of money for yourself trading it. But this has obviously helped the stock to break out, and the daily chart in Intel looks really great right now. It's having a weaker day today, but overall this thing looks great as long as it continues to hold above $23, $24, which it probably will.
Oh. All right. When it comes to earnings reports, there's always like the number the street gets, and they're like, oh, this is what we're going to react to, whether it's up or down. Sometimes it's the EPS, sometimes it's the revenue, sometimes it's the guide, sometimes it's the CapEx, sometimes it's, you know, it just depends on the name. For Nvidia, what do you think is the number that the market cares about the most?
It's going to be the guide for sure. I think that the consensus earnings estimate is 98 cents per share on revenue of 45.91 billion. Which represents 53% or so year-over-year growth. But the earnings whisper number is $1.06. It goes back to what we were talking about. So that's a good bit higher than that actual number. And then from a guidance perspective, the company's guidance for earnings was 94 cents to $1.03 per share on revenue of 44.1 billion to 45.9 billion. But I think that the market's expecting more from them than that. The biggest thing for me, honestly, with this Nvidia is positioning. I just think that one of the biggest problems with Nvidia going higher right now, and again, it's not that it can't go higher if it reports a phenomenal report. It can and will. It's just I don't think there's anyone left to buy it. I saw
everyone owns it.
Everyone owns it. I saw at the end of July a research note from Goldman Sachs that said that they were classifying like positioning in all the different Mag 7 stocks. Nvidia was the one stock that they said was a 10 out of 10 in positioning. I'll tell you the second biggest one, by the way, we were just talking about Microsoft. Microsoft, I don't know if my screen share is still available. Microsoft on that same Goldman note was a 9.5 out of 10. And look at how Microsoft is traded. This report wasn't good. The Microsoft earnings report wasn't good. It was phenomenal. It was really, really, really good. And look how it's traded since then. But this is another one that everybody owned it coming into the report. And it seems like Nvidia even more, it's a 10 out of 10 in positioning according to that Goldman note. And on top of that, the short interest has decreased by over 21% since its last earnings report. So you don't have shorts in there to get squeezed. You don't really have new longs that can come in and buy. Can the stock go up? Yes, it can, but it's going to have to demolish those numbers that I just mentioned. And then it'll be really interesting to see the multi-day reaction after that. Like maybe it has a really, really good report and it is up big on it. And then similar to Microsoft, there's just no one there to buy over the course of the next couple of days because everybody's already in it. It'll be an interesting one. I think the risk is to the downside. If they were to miss, which I don't think will happen, but if they were to like miss those numbers, it'll probably end the whole NASDAQ, like for the whole year, probably, or at least for the quarter. That's how
bad.
The video report is, you know?
Yep. All right. So I have an interesting question for you. Nvidia reports so late in earnings season. Like you said, it feels like earnings season never ends because we get all the main earnings and then we get like the most important earnings at the very end. And then we, in like what, 3 weeks, I think, 2 weeks, 4 weeks, we start banks again. And then, it's just like go all the time. If you had your perfect earnings calendar, like schedule, how would it go for you?
I would have them all done in basically like a 5-week period, like a 4 to 6 week period. Have them all within that period.
Do you want to start with Nvidia or put Nvidia like somewhere in the middle?
So I'll tell you one thing I really don't like that we see sometimes is when you get multiple Mag 7 companies reporting on the same day. We've had a couple instances where it's like 3 of them reporting on the same day. It's annoying. It's a mess because you can't. I don't get so many hands and so many eyes. I can't trade them all at once at the same time as they're reporting on their earnings report. So I would make them all report, but I would still keep Nvidia towards the end. I would rather see what like the Microsoft and Metas, who are their biggest customers, have to say first. And then I think that you get Nvidia at the end, it's kind of priced in a little bit more. You already have like some better expectations of how well they should report because you already saw the reports from their customers. Maybe that's a little bit less exciting, but that's what I would go with.
All right, Derrick. Real quickly before I let you go, any setups that you like in this market? Post a dovish Powell on Friday, a calm Monday today, and Nvidia earnings coming up in 2 days.
So I don't really like this market is my problem. And we are about to enter the most seasonally bearish period of the year here with September. Yet after Friday, the technicals just became so bullish that, this is when I personally struggle a little bit. And that's a good thing to know, right? You need to know as a trader when you perform best and when you struggle. I personally struggle when my thought process is at odds with the technicals. And I feel like that's where we are right now. The technicals in the SPY, the technicals in the IWM are both very, very bullish. The technicals in the Qs are, I think they're more neutral. In order to get bullish, they have to get back above the August 19th high. So, for me, because of that, it makes me a little bit gun shy here until we kind of get through Nvidia. But the biggest thing that I'm looking for right now, and it probably hinders to some degree on Nvidia, is if the weakness in the leaders that we started to see the last couple weeks can continue or not. I love Palantir short right now that it finally broke. I really do. The price at 190, even with that phenomenal earnings report, is just absolutely sorry, I typed up Tesla because I'm trading it. Absolutely insane. And what really changed in Nvidia, in Palantir, from when it was trading at almost $190 compared to when it crashed down to 142 and change a few trading sessions ago? What changed? What changed that brought this down? Nothing. Nothing changed at all. It just very overowned stock, and we saw a market dynamic shift where the rotation started to be coming out of those biggest previous leaders. So especially if Nvidia doesn't perform on earnings, because that'll impact Palantir because it's all related to the AI space, I kind of think that this Palantir is done. I really like the idea of shorting bounces in this. It gave a great opportunity to short into the ADMA on the daily chart on Friday. It was a little bit tricky because you had to short it on the Fed day Friday with Jerome Powell and everything. But I like this short in these low to mid 160s until it proves to me that the Palantir of old is just coming back in and really regaining its strength. And then beyond that, my favorite stuff to trade right now is just these BS insane companies and trading them on both sides. Jumai, I had been short for a 2-day trade. I got out of it into $7. Now here it is going crazy again. It's up 6.5%. this company is complete garbage. If it can gap up again tomorrow, I don't have a position on right now, I might look at it for a short. It's like these crazy companies when they give 3, 4, 5 days straight up in a row. I'm having a lot of success coming in on the other side and shorting them. Reddit was a similar but different example. Shorted on this day. This day got out of the position entirely. I'm seeing chatter in the VTF about Space, another crap company, just completely running up 7%. It's only a day 2. I don't like trading day 2s. This is another one. You rip this thing over the course of a couple of days back to $4 or $5. I'll be looking short on that name as well. I tried to short JOBY in the pre-market, but I was inside offer. I never got filled. This is another one, like just this one I did really, really well with, but I actually want to hammer this further to the short side. So I've been really focused on these crappy companies when they start to squeeze them, trying to capture the last. Sometimes actually buying the breakout, buying the squeeze itself, and then other times I've been having a lot of success just waiting for that big extension, recognizing that these are crap companies, but they can continue to squeeze. It's just the type of environment that we've been in. But if you're patient on your execution, there's a lot of money to be made when those things are moving.
All right. Great stuff, Derrick. All right. I'm going to let you go. If anyone wants Derrick's free ebook, you can go to t3live.com/DOLive. Again, he is the head trader at T3 Trading Group. So his ebook is focused on the benefits of prop trading and how you can work with him over there. So have a good Monday, Derrick, and good luck with Nvidia's earnings on Wednesday. We'll talk in a week. Next week is a holiday, so we'll talk in 2 weeks.
Cool. Have a good one. See ya.
You too. Bye.